Hey everybody, before we dive into today's episode of the AgView Pitch, I want to invite you to check out our exclusive podcast, 19 Minutes. For just $30 a month, you'll have access to high-level business insights and new episodes that are released on the 9th, the 19th, and the 29th of each month. Topics include finance, cost of production, team health, taxes, collaboration, and much more. With 77 episodes already available, signing up gives you immediate access to all past and future content. Click on the link in the show notes and subscribe and start boosting your bottom line today.
Welcome everybody to the AgView Weekly Market Outlook. Today you have Andy Hruby with Joe Vaclavik. Joe, how's it going?
I'm good. Thanks for the invite.
Yeah, no, it's great to have you on. As we kind of talk about markets and what's happened this past week and things to look forward to for the week of March 17th. I think we were talking here a couple minutes ago. You had some good insight this past week on some scenarios where we have a tight global corn situation and how some things could play out to kind of keep a glass half full perspective, if you want to kind of provide some insight on that.
Yeah, I sent out a video with a bunch of charts to my premium subscribers. And the gist of the video is this: the corn situation globally, also domestically in the United States, it's pretty darn tight. There is a lot of corn in China. China's sitting on, I think the number is like 70% of all projected global ending stocks, meaning that your big exporters and other countries are going to be sitting on only 30%. The corn in China doesn't move. It's not going outside of China. It's not going to be exported. So the global situation in corn, global United States, you look at any of the major exporters, it's pretty darn tight. I think that the weight on the corn market, the reason it's been unable to rally, perhaps even more, is twofold. I think the first thing is the tariff situation, which is it's a big unknown, and the markets don't like uncertainty. They don't like the even the prospect that U.S. corn could be tariffed or has been tariffed in some situations. Um, and then the other one is soybeans, and just the fact that we're going to plant a lot of corn acres in the United States this year because the soybean situation is so hugely unprofitable. I mean, the more I look at it, the more I think like, I mean, USDA was talking what 94, I think, at the Outlook Forum. I'm almost thinking 95 might be too low, to be honest. I don't see the financial incentive for anybody to plant soybeans, and I do see the financial incentive for farmers to switch any sort of swing acre into corn.
Yeah, I think it's really important to note that, as guys are finalizing these crop rotations and you're adjusting acreage to, if we're shifting away from beans and to corn for a likely more profitable scenario, we need to be protecting that somehow. You just see it more times than not where we shift acres from beans to corn, and then the tail kind of starts to wag the dog, where we screw up crop rotations and some other
Hmm.
things, and we didn't market accordingly. And then
Yeah.
come harvest time, we're right back in the same scenario. So I guess that's just kind of my big watch out. And for, me personally as a producer, it's something that we really take into consideration.
Yeah, for sure. If you're going to switch acres because of the markets, then you've got to do something about the markets. I know a lot of guys have bought up on crop insurance this year, and they've done the add-ons, they've done the ECOs or whatever, and that's great. And that's part of the reason why corn is so much more attractive. I mean, not only the price is better, but the crop insurance guarantee and what you can do with some of these add-on products it makes the situation substantially more attractive. But yeah, doing some sort of marketing if you're going to add acreage or expand corn acreage is definitely, I think, the recommendation. I don't think anybody would argue with that. At the same time, I mentioned how tight the U.S. situation is in corn and the global situation. Um, I'm gonna, I really think there's a possibility for some better prices this spring or summer. If you run into a weather issue, and this goes for any year, but maybe even more so this year, you run into a weather issue in the United States, and keep in mind, the U.S. is still the growing season globally when it comes to corn. Soybeans, it's shifted to Brazil, but in corn, we're still the biggest producer, and we're the one that really matters. We're still the biggest exporter. We're the one that really matters. You run into even the perception of a weather issue or just the thought for a minute that the crop might be, 5, 6 bushels below trend nationally, which is not a disaster by any means. It's just, you're talking what, 175, 176. You get into that sort of environment, and I do think the corn market has itself a story, even if you're to plug in, a 95 or 96 on the acres. I still think that I don't think 95 or 96 is doomsday. I don't think that's the case.
Awesome. Yeah, no, I think that's really good that you hit on that, because I feel like for the last couple months it's just been bad news after bad news. Um, you kind of hit on acreage there a little bit. Is there anything else you want to elaborate with as far as acreage, or how tariffs may play into effect?
The tariffs to this point are psychological because they haven't the tariffs have not had an impact on export demand. So if you're to look at like what is the reason based on supply and demand that tariffs would send the markets lower, it's because we're going to export less, right? That hasn't happened. To this point, export sales have held up very, very well. Shipments are fine. Keep in mind, however, that the Chinese tariffs just went into effect less than a week ago. So if China was going to cancel some of the unshipped soybean bushels that they've got, it's like 50 million bushels ballpark. It could happen during the next, call it 2 or 3 weeks, unshipped old crop bushels. And then you've got the whole new crop situation where, countries like China who now have a tariff on US soybeans or an increased tariff, they would typically begin buying new crop beans out of the US forward purchases during the spring or summer months. And maybe those purchases are at risk because of the tariffs. With regard to corn, Mexico hasn't done anything, and that's great. We don't need Mexico to do anything. They've been our biggest corn customer. They've been our most reliable corn customer as of late. So we haven't seen any tangible impact, I don't think, to this point due to the tariffs. What you've seen is a lot of fear and uncertainty, and just the prospect that I think soybeans are going to be the ones that are affected, if at all, at the end of the day, kind of the way they were the last time around. The Mexico thing with corn is more of a wait and see, I guess.
Okay. Yeah. How relevant is it that no matter how many bushels of beans China purchases from South America, they're still going to need some high quality US beans. So, I mean, is it safe to say that there will continue to be some demand in China for US beans from a quality standpoint?
Well, China was the largest buyer of US beans last year, and they typically are. That's totally normal stuff. If I had to guess, I'd say they probably will be during the next marketing year too. Even if you're looking at a 10 or 15% tariff, I would imagine that that's the case. Chinese appetite, I don't think is going anywhere. And now you're talking, we kind of know, we have an idea what this year's Brazilian crop is. You're going to start to fast forward very soon to next year's Brazilian crop. And, you get into September, October, you're talking about the planting situation and the outlook and what's the weather. They're going to need to perform again. Soybean situation, as far as the government's concerned and USDA and their projections, it's tightened up a little bit versus the hugely burdensome projections that were out there a couple months ago. The projections are still pretty burdensome, but not as bad as they had been. So I don't know, tariffs at the end of the day, they don't add or subtract bushels from the balance sheets. What they may do is just result in a game of musical chairs where maybe China decides we're going to buy more from Brazil so we can avoid the US and these tariffs. But at the same time, maybe you'll have other global buyers that will have to come to the US, especially if our prices are competitive. And to this point, it's kind of worked out how it normally does seasonally. Brazil's competitive right now because they're into harvest. The crop's now available for shipment. Once we get into harvest, in the fall, in all likelihood, US beans are going to be competitive for a while. And that's kind of it's continued to work that way.
Okay. No, that's good information. I thought kind of while we're talking about beans, an interesting fact that I guess Brian had on one of your podcasts this week was that you look at spring insurance price in the last 20 years. every time the market has traded back to that spring insurance price average. So, I'd be curious. I hadn't looked at corn to see, but it's not something you want to necessarily rely on, but I think it does kind of give us a sense of hope and something to keep an eye out for on this bean market as we kind of playing with psychological uncertainty around tariffs and acreages and just a lot of different moving pieces.
I'll tell you what, I think the U.S. soybean balance sheet has the potential to tighten up very drastically into this new crop marketing year. We've been in this environment as of late where the corn situation has been friendly, and you had a big rally in corn. We rallied from, sub 4 to north of 5 from August of last year through, January, February this year. The soybean market was pretty weak throughout all of that relative to corn. I think you could kind of swing the pendulum back and kind of get back to some sort of middle ground because we're going to lose so many soybean acres. We may only plant 82 million, 81 million acres of beans. It may be less than that for all I know. I think you could make a case for a very tight U.S. soybean situation, especially if you run into a light crop and light meaning just versus trend. Like trends, what you have 52 bushels per acre nationally, a number that we've never actually achieved in real life. You come in 3, 4 bushels light of that, and you got yourself a situation, and you will reduce export demand. Balance sheets aren't static. When we have a light crop, we're going to see reduced demand. But yeah, I think you can make a case for stronger soybean prices. And when beans move on fundamentals, they don't move 40 cents. They move like $2 or $3. And that's the optimistic view, I guess. But I mean, I got to give you something to be optimistic about, right?
That's right. That's right. That was a goal of the conversation today is let's focus on what we can be optimistic about. Um,
This to be clear, so it's mid-March. This is not that seasonals are the end all be all of marketing or market patterns, but mid-March is not a time of year to be really negative row crop prices. This time of year, from now through really mid-May or into the early part of June, that's a time frame that's historically more often than not associated with steady to higher prices in grains in row crops. It's once you get into mid-June, mid-July, where if there's no weather problem, that's where you see your kind of seasonal sell-off. So I know that there is a lot of doom and gloom, and I understand why, and I get it. I feel like a lot of it's been factored in. I also feel like maybe this is a year for the seasonals to play out because we didn't see them play out last year.
right.
We never had the crop scare event like we do more often than not, last year.
Yeah. No, and we got to get it planted too, right?
Yeah.
It'd be really curious to see what this corn market does, as you kind of really hit on a lot of the points of the global tight balance sheet and how the US plays into that. But say we only get 93 million or have a drastic cut in acreage, it's I think that's really going to open that corn market's eyes.
Yeah, the only way that happens is if you have like an extraordinarily wet spring. And as a matter of fact, I was looking that the forecast has changed a little bit. The forecast on Friday morning was talking a whole bunch of rain for the Western Corn Belt, and now it's been dialed back a little bit, but it changes, every few hours. You could run it. The wet Central and Eastern Corn Belt are going to be really wet here for the next 2 weeks, and you're not that far off to if we continue with kind of a wetter pattern that hey, there could be delays in some areas. Hate to even use that word in mid-March, but you're not that far away from those conversations. You're not. You're 2, 3 weeks out.
Right. Yeah. No, I don't think anybody's worried about it yet, but
No,
it's always the conversations of oh it's going to be wet, it's going to be dry, what's your going to be like, and I think it's just
you should just
important
know
to
that
mention.
yeah, that talk's coming. Like
Yeah.
the planting condition talk is coming. It's around the corner. So just be aware that it's on tap. It's not here yet, but it's coming.
Yep. No, this has been good, Joe. Is there anything else you want to leave the listeners with?
Not really. I am admittedly frustrated with the tariff headline driven markets, they're difficult to navigate. I mean, the market quite literally is as good as the next headline, whatever that next headline is. And that's the problem, is that we don't know what the next headline is. And I don't like especially dealing with those kind of markets, but that's where we're at right now. We've been here before. I hope that these trade wars are resolved sooner rather than later.
Yep. No, that's good. Well, thanks everybody for listening. Hope everybody made their crop insurance decisions and got those done as today, as we record this on the 15th, is the deadline. So hope people got that risk stuff in place, and we'll catch you next week. Thanks, Joe.
Yep. Thank you.